Hey, welcome back, everybody. So this is going to be the watch list for Monday, August 19th. And let's go ahead and start with the economic news and see where we're at. This week in particular, I am not a fan of. I'm just going to be honest with you. And the reason for that is twofold. One, this market has rallied all the way back up from a massive sell-off over the last 1 to 2 weeks. Okay, so we are right back at the levels we were at being overbought. And then the news on Japan came out with the carry trade and literally a rush for the exit. And then what did they do? They bid it all the way back up to where we sold off. And what is now, yet again concerning to me, is that the market believes that the Fed is going to start dropping rates in September. Okay, so a couple things. This week is full of Fed president speak, as well as Jerome Powell will be at Jackson Hole, and he'll be talking on Friday. So be very cognizant of the news. This might even be a week, in all honesty, that you just want to sit and watch and see how it goes. So we have the first Fed governor, Chris Waller, talking on Monday morning before the market opens. And then on Tuesday, the market will already be open when the Atlanta Fed president, Raphael Bostic, is going to be talking. And then you have the vice chair of supervision that is going to also be giving a speech. When these folks are talking, the market becomes exceptionally volatile. And it's volatile because they're trying to hedge what the Fed is going to do next. Then on Wednesday, we get the FOMC meeting minutes. Well, you might be asking yourself, what's the big deal about the meeting minutes, right? Powell already talked. He already said, here's where we're at. The market is going to be looking for indicators as to, is it going to be a 0% rate cut? Is it going to be a 0.25%? Are we going to get a 0.5%? If you saw on CNBC, Professor Jeremy Siegel was out a week ago saying the Fed needs to do an emergency Fed rate cut of 75 basis points or the economy is going to collapse. And it didn't do anything near that. And then he came back on CNBC and had egg all over his face. So that is what's happening in the market right now, is everybody is making predictions. And up until now, nobody's been right. So earlier this year, when the market rallied really hard, they were calling for 6 rate cuts this year, starting in March. It's August and we don't have a single rate cut yet. We'll most likely get one in September. So what's going to happen? Well, I'm going to tell you right now, if it's 0 rate cuts, the market is going to sell off and probably sell off hard. If it's a 0.25%, they're probably going to be disappointed because they're hoping for 50 basis points. Then they're looking for another 50 basis points before the election. So we have a Fed meeting in September. There is no meeting in October. The next one will be November. But they want to be bipartisan and they don't want to be taking sides in an election year. So therefore, it leaves the market unhinged. On Thursday, we have initial jobless claims, so we're definitely going to want to watch that before the market opens. And then we're going to have PMI for both U.S. services and manufacturing. And then again, existing home sales, which shouldn't be a surprise, but existing home sales are definitely slowing because of the cost of homes. And then Friday, again, huge wild card, Jerome Powell talking at Jackson Hole. Who knows what he's going to say? And at this point in time, the market's going to be open. So be very cognizant of these time frames, because if the market doesn't hear what it wants to hear, kind of like social media, right? People don't hear what they want to hear, then it's throw the baby out with the bathwater. Okay? So we got a lot of Fed speak, not a favorite week of mine. Personally, I would just sit and wait it out and see how things transpire. Let's take a look at some of the indexes. So let's start with SPY. Again, here's what I said. You know, a week ago, the world was on fire. I mean, literally, these are daily candles. 1, 2, in 3 days, we sold off from 554 all the way down to 510. I mean, almost, a 10% correction. And then what did they do? they just marched it right back up. So let's go ahead and make sure that we understand where are all of our gaps, because I'm a big proponent that gaps fill, 80 to 90% of the time. So we do have a gap, and we always watch gaps on the daily. That is your most important level. We probably have just a little minuscule gap right here. Nothing of monumental pressure that's going to, move the market one way or the other. But again, just kind of like to be cognizant of where they're at, because they do act as magnets when they start to approach. And we have no gap here. And then we still have this open gap down here that's back down toward 508. So these are all my levels from before. I don't need to erase them. You'll see that I had a pivot up here for a possible reject, and we are now pushing directly up to that pivot. I neglected one gap. I didn't think we'd be all the way back up here, guys, in all honesty, after that freak scare from the Japan carry trade. But look at what's happening is we are now pushing right back up to this level. We'll go ahead and we'll look at it on a lower time frame. We're going to look at it on the 1 hour. I think if you're going to get a reject where you might have a little bit of resistance, it's going to be this next pivot right here. And let me make that white. So it's not that far off, but you're actually going to be now trading between the levels right here of 554.64 and 556.74. Now, the good news is there's enough room here to put on a decent trade. What's been happening, though, is the market has just been slowly grinding up as the day progresses, and that's awful for options premiums. So even though the market is going up, what's happening is it's going up so slow that theta is eating away at the contract value. And then it'll get to a level, and then it'll just literally sit there and chop. And you can see that that's exactly what the market did on Friday. It just kind of chopped between these two levels, which was a pre-market high and then my price point, right? If we look at it on a 5-minute time frame, and this is just an area you have to avoid at all costs. You cannot trade this because the premiums will go nowhere and you will just literally lose money, right? So this is just risk off right here. Just don't even waste your time. But again, on a 1 hour time frame, what am I looking for? Right now, in the after hours, we'll have to see how this opens up come Monday morning. But what I would be watching for possibly is a retest here. And if we get some weaker market news or sentiment from that speech on Monday morning, then we'll definitely start to think about pushing lower. Do I think we're going all the way back to the gap fill to the bottom? Maybe. I mean, it really depends on what they have to say. So where would I be looking for overall support? Well, a couple of areas that I would want to pay attention to is going to be this pivot low here at 551, where the market was able to push below it, come back up, push down, and then move higher. I would also be cognizant of this level right here, right before the market closed, where again, they tried to push it down and then they held it higher. So these would be the areas that I would be watching for an overall potential bounce. And then again, if we should miss this back to the downside, then I would look for this pre-market low. So just kind of pay attention to where your pivots are at. Obviously, if you use the supply and demand indicator, that I recommend, it's going to give you some more confidence that you're not going to want to be shorting the market into heavy demand. Now, the good thing is once you get below this 551, it's only a 45-minute order block, which is fairly weak. We miss this, we're definitely going back to the gap fill, right? So right now we have buyers and sellers that are kind of agreeing on price, and what's going to move this is going to be the news. Let's take a look at the QQQs. Super, super strong yet again. I'm going to take a look at this on a daily basis, and you'll see all the ground that was made up, which again is insane, but we are nowhere near as close to the all-time highs like we are with SPY. I'm going to turn that off, but I do want to, again, let's start with the gaps. Always important to understand where these gaps are at within the market, right? We are literally approaching now the bottom of this gap, and then we have another one that's all the way up here that I'm not going to, probably worry myself about right now until we start to make progress to the upside. Go ahead and do that. throw those on there for you. So again, you could put the gap fills and just leave them. You don't have to delete them. If you're wondering why don't I leave them, because the software I have automatically identifies them, and it's just repetitive, right? It's duplication, and I like to keep my charts clear. And then we have a gap below. I mean, so this market is gapping all over the place. So what does that tell you? Extreme volatility, right? When the VIX was all the way up at 60, then the market is just constantly gapping higher, gapping lower. And eventually these things are going to close. I mean, it becomes, right, a matter of time. So be aware of them because, again, they act as magnets. So what am I watching for this week? Well, if we have some strength, I'm going to watch once we get above this level of this 475.57, which was a double reject here back on the 31st of July. If we can hold this level, I'm going to play this for a gap fill up to 480, okay, on the Qs. Now, if we have some weakness, what am I going to want to watch? Pre-market high, pre-market low. And then I'm also going to want to be cognizant of where was the market low from the day before, being on Friday. This is where it just gets a little bit more tenuous, right, to say how is the market holding overall levels. So, I probably want to see, well, where was this pre-market that obviously hold for the entire day on Friday? The high, I'm not worried about because we're at the bottom of the gap fill. So I'm going to be watching these two and see how we open up on Monday morning to decide, are we going to push up higher or are we going to fail this and then start attracting to the gap below? Let's take a look at some individual names that I think will be fun that were in the news this week. Starbucks was clearly one of them. They're getting a new CEO. So their CEO that was there for just about a year was just fired, and the board brought in the CEO from Chipotle. So the Chipotle CEO, his experience is insanely good, and Chipotle's returns, when he was there, the stock went up over 500%. Now the question is he going to be able to do that literally with Starbucks? Maybe it's a longer term turnaround story, but it's not an overnight. But it didn't matter. The market bid this thing up 25% overnight, okay? Which is why it's so important that when you're watching stocks, right, that we came down here to $71, we came down here to 71. This was probably a good buying opportunity. If you take this and just draw it left, where else did 71 seem to hold back in time? Well, right here, back in 2022, right? Yeah, did we get below it for a day? Yes, but then they push it up, support before we moved higher. So this should have told you that this was a high area of interest or that there was overall demand, right? There were buyers that were present here on more than one occasion. I think I showed that to you as well with Nike, and we're going to look at that in a minute. So would I be playing this for a gap fill to the downside? Absolutely not. I mean, the news was way too strong, and they think the future of Starbucks is so much better with him. But do I think it's going higher? No. I mean, because look at their earnings. Earnings, huge miss, right? Earnings here, huge miss. He doesn't even start till the end of the month. The earnings before that, huge miss. I mean, so morale is bad, sales are bad, revenue is bad, the core fundamentals of the company are bad. But what did they pay up for? They paid up for new leadership. So for this one, I would be watching for us to find an opportunity to go back down to the top of the gap and then maybe even start to push into it after earnings. Now, earnings isn't until October 31st, so we got quite a ways to go. But what you might find is just consolidation here. And what you can do is you can sell an upside call spread if you want to, or you could sell a downside put spread. Just thinking that we're probably not going to go anywhere. We're probably range bound, and we're going to literally just be stuck somewhere right in here for the foreseeable future, right? So let's go ahead and we'll just label that like this. And when you're at the top of the channel, you sell a call spread. When you're at the bottom, you sell a put spread. It comes back up, you sell a call spread, comes back down, you sell a put spread. So I don't think there's going to be a ton of movement in this until earnings, but you never know what these Fed governors might have to say. Let's take a look at another one. Bill Ackman took an interest in Nike, where he's trying to control some of the board seats. Now here, my gap fill box is from whenever I talked about this last. I told you that if we break out of the channel, that's your indication to go long, right? That's when we get in calls. We've been consolidating here. These are days. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 26 days, an entire month of just consolidating, right? So your cue is go long when you break the channel of consolidation or go short when you break to the downside. Now, if we're going to break to the downside, there was quite a ways to go, probably down here to the 66. But again, Nike, super strong brand. What I would pay attention to is if we have a strong market and the consumer goods like Walmart's numbers were insanely good. The interesting thing with them was they're saying that people who make over $100,000 a year are now shopping there on a reoccurring basis. Well, that can't sound good from an overall inflation perspective, right? If people are making six figures and they now have downgraded to Walmart, kind of interesting. But I would watch this one on strength, maybe to a gap fill back up to 93. If not, at least the halfway point, right? Or where you found prior support, which was right here at 88. So I don't think you need to go the full 93 and a half. But if you want to do some calls on strong market, volume's increasing, which is a good news story, I would target 88.66. Let's go ahead and take a look at, let's look at Walmart since I even mentioned it. Crazy, right, guys? I mean, gap fill below. Another gap fill now to the upside off of earnings. I mean, it's just insane that these stocks are gapping up the way they are. But just remember, when things go up this fast, they come down even quicker. So we pushed up higher on earnings. They're coming and they are now, looks like touching back to the top of the gap. Exactly. And then it's probably going to do some consolidation before it heads higher. So this one will most likely get an upgrade from analysts to potentially move to the upside. So this is, again, another potential long-term play, but look at the narrow range that it's been trading in for such a long time. And then here was your catalyst. So how would I play this one? Wait till you come down to the top of the gap at about 72.59, maybe about $1 lower. And then again, on a strong market, you could do some calls. And then what would I target? I would target where this candle sold off, maybe do the 75s would probably be a good call trade to the upside. I want to go ahead and take a look at Boeing. Again, another news story, right? They're getting a new CEO. They finally got some plane orders coming in. You have the overall airlines that are now starting to talk positive about Boeing. What I would be watching here on this one, let's always start on the day, see what we got. We did have a gap fill here. They closed the gap. So again, proof that gaps do fill and close 80 to 90% of the time. Okay. What I would watch on this one, because again, I'm not sold here, is I would be watching for a break above the trend line before I would go long. You can see we're pretty close. The other thing I would do on this one is I would do a Fibonacci from the pivot high to the pivot low. Okay. We are right at that level, 179.73. So if there's weakness in the market, I think this is your opportunity to possibly play it to the short side. Okay. So to play it lower. Now, if we hold this, the 179.73, again, volume has been increasing, then this is one that your next target is 183.79. I would play it to the top. We hold 183.79, then I like 199.58. I use a fib level when you have such a dramatic sell-off because you really don't have any solid pivot points, right? We're just falling. We're not falling, bouncing, falling, bouncing, falling, bouncing. So I don't have any clear sight as to where the pivots are. For fun, let's just throw on the supply and demand indicator. We have a lot of buyers sitting right down here below this level. So if you're going to short it, you have to be cognizant that you're probably not going to push it down very far. Now, conversely, we also have some sellers right here on a 2-hour level, so we're at a pivotal moment. But if you notice above, the next block of sellers is all the way up here above the 786 fib level. So this thing has some room to run. So keep bowing on your watch list for potential to the upside. Let's go ahead and take a look at Amazon. Amazon was one I think that I covered in great detail where I said we had a gap fill. You will see that once we were able to break the gap with some momentum, they pushed it up, we came down, we tested the bottom of the gap, and now they ran it higher. I did have a pivot of 173.84 that was all the way back here from April 22nd, and we held that level, and then we held that level here again on Friday, May 31st. And once they use that as support, they're pushing this higher. Again, I think Amazon just oversold on earnings. They did the exact same thing, right? They're not hearing what they want to hear, and then it's like, screw it, dump the stock. Those are great opportunities to look for buys, which is exactly how I did my Schwab trade, and I'll share that with you in a minute. So I would look for possibly a gap fill back to the upside of 181.83. What would I be playing? I'd probably be playing the 180 calls just to be a little bit conservative. I wouldn't go too far out of the money in case we come back down and test the trend line, right? Before we then move higher. So then the last one that's been in the news where they're talking about breaking up the company is Google. I think that this is, again, another really good long-term buy. And if they did break up the company, it would be worth so much more than what it is as of today as a full unit. You can see we have another huge gap to the upside. That has not been filled right here. This candle to this candle. We have probably a little baby gap right here. It's not very much, but you can just marginally see that there's a little gap between these two candles. Right there. And then it looks like this gap already filled with this candle wick. Okay. So here's the good news. We're pushing higher. A couple things that I would look at is, let's look at, just for fun, real quick, a fib level to see am I anywhere near a reject. I'm not. The closest reject is all the way up here at 173. We're trading all the way down here at 162. Again, this is a news story as to it's in the courts. How is the judge going to rule in their favor, not in their favor? If we find weakness, where would I look for movement to the downside? Back here to the 154.93 where we found the pivot support to actually move higher. But right now we got a low, a high, a lower low, and we're not able to make a higher high. So I would not be going long this until you could get above 165, right? We rejected it on this day. We rejected it on this day. We rejected it on Friday. So you can see that there's clearly resistance at that level where they can't push it higher. You don't want to get into calls until you can hold this level at least on a 5-minute candle, see overall market strength, and then I'd be playing, if you're at 165, I'd probably be playing the 170 calls. So, looks like we're starting to do some good bullish consolidation. Again, we're consolidating in this area with potential room to the upside. And then the last one, I know some of you have asked me about this one. I did a post on LinkedIn about it as to how did I play this. I charted this with the August masterclass students, and we looked at this on Monday of last week. Okay. So Monday of last week, I said, if we don't hold this level of 61.20, we're coming down here to 59.98. We fail that. We're coming down here to 59.20. We fail that. We're coming down to 56.69. But what happened on Tuesday while the market was opened? Again, this is why it's so important to pay attention to the news, you guys. This was right here was PPI day, right? And PPI was strong. The producer price index was good. So they pushed the market down. And then guess what? As it started to move up on positive news, look what happened real time. The overall buyers literally showed up in the middle of the day and started buying the stock. And we were declining volume, and then we got the push that we needed going into the market close. When I saw these buyers started stepping in, defending this price level, I got into calls. Now, what happened overnight? They really stepped in and bought it. We pushed through my higher price target of 62.75. We pushed through my price target of 63.95. Unfortunately, I did not cash out up here, which is where I should have. This was on Thursday, right? And then this was Thursday pre-market before we pushed down. So, these calls went up 500% from the bottom. You don't need a lot of money in options. So if you go in with $1,000, it turns to $5,000. I went heavy, which is why the trade ended up being over $40-some thousand by Friday close of business. But now what's happening? More buyers are stepping in. So this is one that I am going to convert to more of an equity position, and then I'm going to sell out of the money upside calls against it. Why? Because as the Fed lowers rates, what sector gets stronger? The financials. Why do they get stronger? Because they can lower their deposit costs. So you have to remember with banks, their margin is based upon how much do they charge their loan customers compared to how much do they have to pay their depositors. Well, think about this. Right now, margins are compressed because the loan book is locked. It's long duration. Liabilities or deposits are short duration. They reprice overnight. So as soon as the Fed lowers rates, guess what every bank is going to do the next day? They're going to lower all of their deposit rates, literally saving themselves billions of dollars of interest expense, increasing their margins. Therefore, they have more earnings power. Therefore, the banks will move higher. So I really like some of the community banks, some of the regional banks. The big banks I think are fully valued. Like a JP Morgan Chase is like trading at almost 2 times book value. There's no more upside in that. Where's the upside? It's in the brokers. So it's in your Schwab, probably Morgan Stanley. It's going to be in the regional banks, your US Bank, your PNC, your M&T, your Key Bank, your Regions Financial, things along those lines. Those banks will do better in a lower interest rate environment because they get to reprice their deposit book literally overnight. The big banks like Chase, Wells, B of A, they never paid up for deposits. They never had to. Why? Because they have billions of consumers asleep at the wheel that have all their money in a checking account or a money market earning 5 basis points. So that's the dynamics, and that's why I trade the banks, because they're very cyclical in nature depending upon what the market is doing. So hope that helped. It was a little bit longer than usual, but it's important that you understand the levels, why I teach the way that I do, because if you are just patient and you capitalize on A-plus trade setups versus just taking a trade to try to make money, you will do exceptionally well. So with that, my friends, have a really good week. I think it's going to be pretty much risk off, and I'm just going to do a lot of watching and listening to what the Fed governors have to say. So with that, if I can ever help, don't ever hesitate to reach out. Have a great week.